Hello everyone, and welcome to another week of financial markets and interesting economic developments, I am sure. Clifford Bennett, Chief Economist, ACY Securities. Now, markets, but particularly equity futures, have opened with a little bit of a spring in their step today in Asia. Well, in US futures have at least. There's been a little bit of volatility all around the region. Not a lot of really major economic news out just yet, but that's certainly set to change later in the week as we progress. But on markets, this equity market rally is ongoing, but please note, the US market has only so far recovered half of its losses. So it's not really in a situation that you could claim it's an astounding bull market again. But what I do think is happening is that everyone who wanted to buy the dip has bought the dip and is buying still. Whereas the sellers kind of took advantage of this opportunity to stand back and see how far that rally could go before they re-entered the market. So that's something to be careful of. If US futures were to begin to hesitate where they are now going into the New York Open, I think you will see some buying on the New York Open. But if they start to hesitate during that morning session in New York and slip a little, that may not be the case. They might just keep going through the roof because everyone's decided to buy the dip. But if they do hesitate and start to roll over, which is kind of my preferred scenario, preferred I mean most likely, it would be a real worrying sign for the price action moving forward, because what it would say is that there's some big funds out there who do need to lighten the load of their investment portfolio in stocks. And that was a big part of the major driving down move in prices. Of course, we still have problems occurring with the Evergrande situation in China. And also we have the situation that all of China is slowing at the moment. There's even electricity disruption, small but still significant. And a lot of that, though, to give credit to the Chinese, is due to their environmental targets. But again, it's a cause of supply chain disruption. And we're going to see ongoing rolling supply chain disruption. I've been saying it for over a year now, and it's exactly what we are seeing. It's never been that we have a free get out of jail card and everything's turning back to normal. These rolling interruptions are continuing. Speaking of which, in Australia, New South Wales Premier today, very bullish on the idea that we do have a very solid reopening plan. However, she kept saying the caveat all the time, as long as our health system doesn't get too stressed. So as long as hospitalizations remain reasonable, the reopening plan will go ahead as outlined today around the 11th of October, the first stage, last week of October, a more thorough, if you like, opening up, which will be great. But then the full final opening up doesn't come to around the 1st of December. And the Premier and the Health Officer were particularly concerned about that couple of weeks where you have this first stage of opening up, that it doesn't all go wrong and you can't have the second stage of opening up. So after about the 11th of October, the sort of the 1 to 2 week mark after that date is where to keep a close eye on hospitalizations as to whether this will be sustained. Now, the Premier doesn't think we'll ever go back into lockdown again, and hopefully we won't, and I tend to think she could be right on that, but I do think there is a high risk of ongoing, occasionally, some sort of restrictions on movement, or particular towns perhaps, or suburbs going into some form of lockdown. So it's not a completely get out of jail free card, everything is good. And even if it were, we have the US economy slowing rather significantly. We have the Chinese economy slowing rather significantly. They are the two major economies in the world, and that is going to impact global growth. It is going to impact demand for Australia's exports, specifically and especially given there is some obvious disruption in the property development industry and market in China at the moment, and that was a big draw card for our iron ore exports. So if that housing construction were to slow a little bit in China, plus we've had some relationship stress, that could, plus Brazil is opening back up again to supply China, that could have some real downward pressure on Australia's exports. And whilst there is hope that New South Wales will be opening up to international travel late October, December, that's not a certainty either. And of course, things will be slow to get moving in terms of just the number of aircraft that are up and flying again and ready to deal with that obvious demand. So we'll see how all of that goes. But what I'm saying is, yes, a good celebration in the Australian equity market this morning on the good news of a reopening up plan for New South Wales, and also Victoria wanting to reopen its borders with New South Wales as soon as it becomes possible to do that. That is a positive as well. Other states, of course, not quite so excited about the idea of opening themselves up to COVID infection when they really don't have any. So that's the dilemma for them. So regardless of vaccination levels, do you really want to open up when most of your citizens are enjoying a relatively normal life? Though in Queensland, of course, you do have a lot of pain and suffering in the tourism industry. So they will have a difficult decision to make. My point is, we're not going to have a booming recovery on this opening up the way we did last time, because we haven't had the access superannuation, we haven't had JobKeeper, we've had more targeted responses. People are really hurting after this particular lockdown in New South Wales, and they're not going to be out spending as big as they did last time round. We will see a jump in the data though. Of course, retail sales will have big monthly increases because they were so low the month before. So we'll see this spike in data. That spike in data doesn't mean we have a strong economy. It just means people can go out and shop again. It doesn't mean we have a booming economy, and that data will quickly subside. So it's great news that we are on a track of reopening. That there are vulnerabilities to that scenario, but they should be overcome with time. And the worst case scenario is that the roadmap out has a couple of delays and hesitancies, and then after that we have 1 or 2, 3, 4 or 5 regions from time to time around New South Wales forced into some further form of restrictions on movement, or even in an extreme case lockdown should there be a rather nasty outbreak somewhere. It's all about those hospitalisation numbers though, so do keep an eye on that. As more and more people get vaccinated, more and more people, a bit larger proportion of people hospitalised in ICU and unfortunately deaths are vaccinated people. So that's something to be aware of as well. It's an inescapable reality of the fact that the virus continues to spread regardless. It's reduced but continues to spread, and it continues to make vaccinated people quite sick as well, but in far, far lower numbers. So that's why the hospitalisation level could still rise even with high vaccination rates. So that'll be interesting to see how that all works out, but I really want to stress it's something to keep an eye on. Currencies, the Australian dollar's had a little bit of volatility on the day. The euro looks like it wants to rally, as if all of the discussion about Merkel and her replacement and the incoming government in Germany is an unsettling factor, to be sure. And I think we can expect that moving forward, things won't run as smoothly as they have on the political front in Germany moving forward as they were before now. That's a slight uncertainty for business, and that generates a little bit of caution in equity markets and the currency there. But the euro's showing a little bit of signs like it thinks everything's going to work out okay and wants to rally on the day. Overall, I think the US dollar is still going to be quite bullish, but certainly on the day it's sideways volatile choppiness for currencies. I think gold is starting to make a little bit of a run to the upside. That'll be interesting. I still think gold's a good buy medium term while 1730 holds. It was looking very heavy towards that level, seems to be finding its feet now. Investors are coming back to that market. So I would think long term, I'm very bullish gold. That hasn't changed. Short term, we've been a little bit cautious last week. On the medium term now, I'm thinking while 1730 holds, small accumulations of gold all the time are probably a good idea. In terms of equity markets, to make a call, very difficult on a Monday, but I do think we could see a little bit more upside in the US market. But then after that sort of lunchtime period in the US, that's where I think we'll begin to see the trend for the rest of the week. Clifford Bennett, Chief Economist, ACY Securities. Thank you very much.